In a significant turn of events in the evolving landscape of cryptocurrency policy, President Donald Trump is poised to announce a groundbreaking Bitcoin strategic reserve during the upcoming White House Crypto Summit on Friday. This revelation comes from Commerce Secretary Howard Lutnick, who indicated that the administration is actively embracing the digital asset industry, which has seen its share of regulatory uncertainty in recent years. Speaking ahead of the summit, Lutnick stated the president definitely thinks that there's a Bitcoin strategic reserve, signaling a strong commitment to Bitcoin as a pivotal component of U.S. monetary policy. He further elaborated, now there will be the question of how do we handle the other cryptocurrencies? I think the model is going to be announced on Friday. This announcement is set against a backdrop of Trump's growing affinity for cryptocurrency, which he has promoted as integral to America's financial future. In a recent post on Truth Social, Trump articulated his vision, declaring a U.S. crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration. He confirmed that the reserve would encompass not only Bitcoin but also other cryptocurrencies such as XRP, Solana, SOL, and Cardano ADA, indicating a broad strategy to position the U.S. as a leader in the digital asset domain. The White House Crypto Summit is a pivotal event gathering influential executives, founders, and investors to discuss regulatory frameworks and the economic potential of cryptocurrencies. This initiative follows Executive Order 14178, which outlines the administration's commitment to the responsible growth and use of digital assets. This marks a notable departure from the previous administration's stringent regulatory approach, which had stifled innovation and led to legal challenges for many in the crypto sector. As the announcement approaches, the cryptocurrency market has reacted with enthusiasm. Bitcoin's price surged back above $90,000, reflecting renewed investor confidence. According to Petr Koziakov, CEO of payment infrastructure platform Mercurio, renewed optimism that U.S. President Donald Trump will make the announcement of a Bitcoin reserve strategy is triggering a wave of buy orders. This positive sentiment is crucial as the industry grapples with the aftermath of significant market volatility and the collapse of various crypto assets in recent months. The implications of a U.S. strategic Bitcoin reserve are profound. By formalizing a position on cryptocurrencies, the Trump administration could invigorate the market and attract innovation back to American shores. This strategic reserve could serve not only as a buffer against international competition, particularly from countries like China, but also as a foundational element of a new digital economic framework. Lutnick hinted at the potential for Bitcoin to receive unique status, suggesting that it may be prioritized over other digital currencies in the administration's policies. However, this plan is not without its critics. Some Bitcoin advocates have voiced concerns over the inclusion of other cryptocurrencies in the reserve, arguing that it could dilute the perceived value of Bitcoin. The decision to incorporate a diverse array of digital assets reflects a growing recognition within Washington of blockchain's transformative potential, but it also raises questions about the motives of advisors and the broader implications for the cryptocurrency ecosystem. As the summit unfolds, industry observers will be keenly watching for the regulatory clarity that may emerge. This is essential for payment processors, banks, and fintech companies looking to integrate digital assets into existing financial systems. Clarity in regulations could lead to enhanced transaction efficiencies and expanded financial inclusion, whereas continued ambiguity might stifle innovation and adoption. In conclusion, as President Trump prepares to unveil his Bitcoin strategic reserve, the anticipated announcement represents a watershed moment in U.S. cryptocurrency policy. Its potential to reshape the regulatory landscape and elevate the U.S. to a leadership position in the global digital asset arena cannot be understated. As the crypto community awaits further details, the outcome of the summit could set the tone for the future of digital finance in America, ushering in a new era of opportunity and growth. In a highly anticipated move, President Donald Trump is set to announce a groundbreaking strategy for the United States cryptocurrency policy, including the establishment of a Bitcoin strategic reserve. This significant development is expected to be revealed during the first-ever White House Crypto Summit scheduled for this Friday. Commerce Secretary Howard Lutnick, who shared insights ahead of the summit, indicated that Trump's vision for Bitcoin and broader cryptocurrency regulation is rapidly coming to fruition. Lutnick emphasized the importance of Bitcoin in Trump's evolving cryptocurrency strategy, stating, "The president definitely thinks that there's a Bitcoin strategic reserve." He hinted at a unique status for Bitcoin, suggesting that while it will be treated distinctly, other cryptocurrencies will also receive positive but varied treatment. "I think you're going to see it executed on Friday," he added, underlining the administration's commitment to the digital asset industry. In his continued support for cryptocurrencies, Trump expressed his intentions in a recent post on Truth Social, where he declared, "A U.S. crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration." He further elaborated that this reserve would encompass not only Bitcoin but also major cryptocurrencies such as Ethereum, XRP, Solana, and Cardano. The overarching goal, as articulated by Trump, is to position the U.S. as the crypto capital of the world. The upcoming summit, chaired by notable figures David Sachs and Bo Hines, aims to foster discussions on regulatory clarity, financial innovation, and economic opportunities within the evolving digital asset landscape. It follows Executive Order 14178, which marked a significant shift in the U.S. administration's approach to cryptocurrency, contrasting sharply with the stricter regulations imposed by the previous administration. This pivot is expected to stimulate innovation and attract a wave of investment back to the U.S. crypto market. Market analysts are already observing the effects of these political announcements on cryptocurrency prices. As of March 5, Bitcoin experienced a notable increase, reaching $88,465, while Ethereum surged 3.66% to $2,173.40. The global cryptocurrency market capitalization climbed to approximately $2.86 trillion, reflecting growing optimism among investors. However, despite the positive momentum, some altcoins faced declines, highlighting the volatile nature of the crypto market. Looking ahead, the impact of Trump's strategic reserve announcement and the outcomes of the crypto summit could dictate the direction of the cryptocurrency market in the coming months. Analysts are split on Bitcoin's future, with some predicting it could reach upwards of $120,000 by mid-2025, fueled by institutional adoption, while others caution that it may retrace to lower levels due to market corrections. As the crypto landscape continues to evolve, the coming days will be pivotal. With Trump's administration poised to redefine the regulatory framework for digital assets, the implications for investors, innovators, and the broader economy could be far-reaching. The anticipation surrounding Friday's announcement underscores a critical moment for the future of cryptocurrency in the United States, potentially solidifying its role as a leader in the global digital finance arena. In a bold move that could redefine the landscape of cryptocurrency regulation in the United States, President Donald Trump is set to unveil a comprehensive Bitcoin strategic reserve strategy at the inaugural White House Crypto Summit this Friday. This announcement, as confirmed by Commerce Secretary Howard Lutnick, symbolizes a significant pivot towards embracing digital assets, positioning the U.S. as a potential leader in the global cryptocurrency market. Lutnick, in an exclusive interview with Ksenija Pavlovich-Makatir of the Pavlovich Today, shared that Trump is keen on establishing a Bitcoin strategic reserve. "The president definitely thinks that there's a Bitcoin strategic reserve," Lutnick stated, indicating that Trump's vision will not only prioritize Bitcoin but also involve a diverse range of cryptocurrencies. He elaborated, "Bitcoin is one thing, and then the other currencies, the other crypto tokens, will be treated differently, positively but differently." This forthcoming strategy aligns with Trump's ongoing advocacy for the crypto industry, particularly following a series of regulatory challenges faced during the previous administration. In a post on Truth Social, Trump expressed his commitment to establishing the U.S. as the crypto capital of the world, asserting that a U.S. crypto reserve would revitalize an industry he claims has been under attack. His proposed reserve is expected to include not only Bitcoin but also Ethereum, Ripple's XRP, Solana, and Cardano, a diversification strategy that has sparked discussions among industry leaders. The cryptocurrency market reacted positively to the news, with Bitcoin's price surging over 7% to around $88,000 following the announcement. This spike highlights the market's sensitivity to regulatory developments, particularly in the wake of Trump's previous dip below $80,000. The proposed strategic reserve could attract more investors and innovators back to the U.S. crypto space, potentially revitalizing a sector that has faced increased scrutiny. The upcoming crypto summit, co-chaired by David Sachs and Bo Hines, aims to create a clear regulatory framework that fosters innovation and economic opportunities in the digital asset landscape. The event will feature prominent figures from the crypto community, including Coinbase CEO Brian Armstrong, who has expressed his belief that a Bitcoin-only reserve might be the simplest and clearest approach. If folks wanted more variety, you could do a market cap weighted index of crypto assets to keep it unbiased, he suggested, yet acknowledged that sticking to Bitcoin could be the easiest route. Analysts have noted that while the strategic reserve could serve as a hedge against inflation akin to gold, the lack of specifics regarding its size, management, and operational framework raises questions. Andrew O'Neill, managing director at S&P Global Ratings, pointed out the significant differences in the nature of investments among Bitcoin and other altcoins, emphasizing the speculative elements associated with many of them. As the crypto community prepares for the summit, the implications of Trump's announcement could reverberate beyond U.S. borders. Should the administration successfully implement this strategic reserve, it may not only reshape domestic policy but also influence global perceptions of cryptocurrencies as viable assets. The outcomes of this summit and Trump's vision for a national crypto reserve could mark a pivotal moment in the evolution of digital finance, defining the U.S. role in the future of cryptocurrency. In conclusion, as the crypto summit approaches, all eyes will be on President Trump's announcement. The potential establishment of a Bitcoin strategic reserve could signal a turning point, inviting renewed interest in digital assets and fostering a more innovation-friendly environment. How this plan will be executed and its broader impacts on the industry remain to be seen. But the discussions initiated by this summit are likely to shape the future of cryptocurrency regulation for years to come. In the ever-evolving landscape of cryptocurrency, investors frequently analyze the merits of various digital assets, with Ethereum, ETH, and Solana SOL often at the forefront of discussions. Despite their popularity, a recent analysis has shed light on a misleading argument that has ensnared many potential investors. While both Ethereum and Solana boast numerous projects within their ecosystems, the anticipated boom in gaming coins, a segment seen as a promising growth driver, has not materialized, prompting a re-evaluation of investment strategies. Ethereum, with a current market cap of approximately $262 billion, has long been heralded for its capabilities in hosting decentralized applications and smart contracts. However, recent scrutiny reveals that the gaming sector on Ethereum is far less robust than anticipated. Notably, only one gaming-related project, Immutable X, boasts a market cap exceeding $1 billion, and its price has been on a steady decline since its launch in 2021. The absence of significant gaming projects in Ethereum's top 100 by market cap raises critical questions about the viability of this segment as a catalyst for growth. Similarly, Solana's gaming landscape appears bleak. Recent data indicates that none of the 300 largest assets on the Solana blockchain are gaming coins, with the few existing projects struggling to gain traction. This stark reality belies the initial excitement surrounding the integration of gaming and cryptocurrency, leaving both chains without a compelling gaming-related investment thesis. As Alex Carchidi from The Motley Fool aptly notes, if someone pitches these coins to you as part of the investment thesis for the underlying chains, consider looking elsewhere for advice. Yet amidst this discouraging outlook for gaming coins, there remains a silver lining. Both Ethereum and Solana are emerging as platforms for artificial intelligence AI projects, a sector currently experiencing significant investment interest. On Ethereum, several projects with market caps exceeding $1 billion are gaining traction, while Solana hosts a smaller but notable assortment of AI-driven initiatives. The allure of AI in crypto could potentially provide a much-needed boost as these projects aim to create infrastructure for AI agents to operate efficiently on the blockchain. The current rise of AI integration in the cryptocurrency space presents an intriguing opportunity for investors. By acquiring Ethereum or Solana, investors position themselves to benefit from future growth in the AI sector while retaining the potential for profit should the gaming segment eventually find its footing. This duality could pave the way for substantial returns over the coming years. In a parallel realm, market dynamics have been jolted by a recent security breach at Bybit, where over 417,000 ETH, valued at approximately $720 million, was converted into Bitcoin following a massive hack. This unprecedented event has raised alarms about market volatility, particularly as the movement of these funds could impact both ETH and BTC prices. The hacker's actions have introduced a new layer of uncertainty, prompting traders to remain vigilant as the market grapples with the implications of such large-scale transactions. Despite the challenges facing Ethereum and Solana, the potential for growth in AI-driven projects combined with the volatility introduced by recent events could create a distinct investment landscape. As the cryptocurrency market continues to evolve, the coming months will be critical for stakeholders to monitor developments closely. Investors must remain adaptable, discerning which narratives hold merit and which may merely distract from more promising opportunities. In conclusion, while the anticipated boom in gaming coins may have faltered, the burgeoning field of AI presents a compelling alternative for investors eyeing Ethereum and Solana. As the cryptocurrency market navigates through challenges, including security breaches and fluctuating investor sentiment, the focus will likely shift towards innovations that promise real-world utility. For those willing to stay the course, the future holds potential, but it will require careful observation and strategic foresight. In the ever-evolving landscape of cryptocurrency, the dynamics of investor sentiment and market behavior can shift dramatically within a short span. Recent developments have seen significant capital outflows from Solana, signaling a potential shift in preferences among crypto investors. As the market grapples with uncertainty, factors such as macroeconomic conditions, high-profile scams, and significant security breaches have influenced where capital is being allocated. In February alone, Solana experienced a staggering $485 million in outflows as investors sought refuge in perceived safer assets. According to a report from Binance Research, this migration of capital predominantly favored Ethereum, Arbitrum, and the BNB chain, highlighting a growing trend towards stability in a volatile market. Overall, there is a broader flight towards safety in crypto markets, the report noted, indicating a notable increase in Bitcoin's dominance, which rose by 1% to 59.6% during the same period. The backdrop to this exodus includes a series of unsettling events that have rattled the crypto community. The largest hack in the history of the industry, which siphoned off $1.4 billion from Bybit on February 21, has undoubtedly contributed to the rising anxiety among investors. Coupled with this was the disappointing performance of Solana-based memecoins, particularly following the controversial launch of the Libra token. This project, backed by Argentine President Javier Milei, saw insiders allegedly extract over $107 million in a rug pull, triggering a rapid 94% decline in its value and erasing approximately $4 billion in investor capital. Anastasia Plotnikova, co-founder and CEO of the blockchain regulatory firm Ethereum, expressed concern over the current state of memecoins. Memecoins have evolved from community-driven social experiments into a chaotic landscape dominated by value extraction from retail investors, she remarked, emphasizing the prevalence of insider manipulation and pump-and-dump schemes that have tarnished the integrity of the market. As capital flows away from riskier assets, stablecoins and real-world assets RWAs are surging to record highs. The value of stablecoins surpassed $224 billion while RWAs reached an all-time high of $17.1 billion as investors increasingly seek predictable returns amidst market turbulence. Binance Research attributed this trend to several macroeconomic factors including escalating trade tensions and waning expectations surrounding interest rate cuts. As Alexander Loktev, Chief Revenue Officer at P2P.org, pointed out, the ongoing uncertainty in global risk assets may propel RWAs towards a staggering $50 billion valuation by the end of 2025. The recent outflows from Solana underscore a significant shift in investor behavior driven by a blend of external pressures and internal market vulnerabilities. As the cryptocurrency landscape continues to evolve, investors remain vigilant, adjusting their strategies in response to both market conditions and emerging threats. Looking ahead, the future of Solana and similar networks will largely depend on their ability to restore investor confidence and adapt to the rapidly changing environment. As the market seeks stability, it will be interesting to observe how these dynamics unfold in the coming months.